Evening, everyone. Happy Friday, and welcome to another episode of the Friday Wrap Up with yours truly, Kevin Wheatmark, aka the Mortgage Mouth. And let's just start off by me flat out asking, jump on YouTube, give a subscription to the Mortgage Mouth. You get all the content, past content, all the goodies. So would be much appreciated. So please check that out. So as we do every Friday, I like to bring us a little bit of a longer version of a video, recap the week, give some thoughts so that over the weekend, open houses, taking clients out, having conversations, you'll be up to speed on what's going on and we can all be on the same page. And as always, if you need anything over the weekend, a flyer, pre-approval, you have a question, all questions are great questions, please don't hesitate to give me a call. So the big thing that's really transitioning in the past couple weeks, but it kind of really picked up steam this week, was that the consumer is moving into their uncertainty phase. We saw retail sales really fall off a cliff about a week and a half ago. And this week we saw consumer confidence fall below 100 on the reading. Forecast was for about 103. I want to say it came in about 98. So all eyes now are on the consumer. The consumer accounts for 2/3 of the GDP. GDP, however, did come in exactly at forecast as I predicted it would. That's a good number for us to really look at as we move into like April and we get Q1 readings and we get GDP readings for Q1. It'll be a good indicator of what is really happening in the economy. Are we able to stave off some type of recession or whatever the case may be? And I don't think we're moving into that. It's just everything is moving at light speed. The administration is moving at light speed. Layoffs are aplenty, and that's across the board. We saw, again, as I've mentioned in my daily dose, Walmart, Salesforce, disappointing earnings, poor forecasts. It's just kind of the writing is on the wall. The other thing that we saw is today we had PCE. While inflation remains sticky, it came in right at forecast. So we didn't see that huge spike that CPI gave us about 2 weeks ago. I believe that's about right, where we saw it come in super hot. And what happened was this interest rates just took off, right? We went all the way up to over 4.8% on the 10-year Treasury. That spiked interest rates only for it to come all the way back down based on the retail sales number that was released on that Friday, which to me is saying, look, because inflation came in steady today, although it's sticky and it's still a concern because it's still running higher than the Fed wants, the number one concern now is the economy. So, in talking about that really quick, I mentioned it on What's Brewing yesterday, the show I do, Instagram Live. Please don't hesitate to tune into that on Thursdays with my cohort, Jennifer Goodman. But what's really going on now is traders are in the business, and I stress this on the show, of making money, right? They're not really particular of, do I want to be in treasuries? Do I want to be in stock? Whatever the case may be, they're just trying to read, the economy, and they're trying to gauge what's the best place to place money. And in times of uncertainty where you see a stock market in fluctuation, it's up, it's down, it's very volatile, why not sink a chunk of money into treasuries? It's a safe haven. It's a guaranteed rate of return, and that's what we're seeing, and it's trickling over week by week by week. Since the inauguration, we have seen every week rates improve. Now, they're ever so slight, even though the 10-year Treasury dropped to about 4.203 today. We didn't really see a lot of give from the banks, right? They're going to keep those spreads because if they drop rates too fast, you're going to see a lot of people bail on maybe locks that they have, or you're going to see a plethora of refinances from where people just recently purchased. So banks are going to be really cautious in turning over a lot of that yield spread to the consumer at a very quick pace. So rates kind of remain steady from where they were towards the beginning of the week. As always, GDP. Oh, the other thing that I really saw, and I mentioned it on the show, was new home sales and pending sales both decreased. Now, it's on a national level. As we stress all the time, real estate is hyper-local, which is why you need a really good real estate agent to help you analyze, in particular, the zip code, the neighborhood that you're looking to buy. But I look at that number and I'm like, okay, the consumer now, uncertainties here. We're back to the possible, we're just starting to tiptoe into some quicksand, and what we're seeing is the consumer pull back. Now, will rates trump that? I'm hoping so. I'm hoping that the ever so slight decrease week after week after week get some people off the fence and they say, nah, you know what, that's actually a good payment. That's in my wheelhouse. So again, if you need me to crunch numbers so that you can go and then call some previous clients that felt payments were a little bit high, happy to do it. The other things I also continue to stress all the time is use the bank's money for closing costs right now. I think that is still a great way to go. Especially, I mean, if you did that in January or you closed in December and you used the bank's money, wow. Within the next couple months, it looks like if this trend continues where we have a slowing economy, what an opportunity for you to refinance and all your closing costs were paid for. That opportunity will present itself again. So if you don't have a clear understanding of what that means, please don't hesitate to give me a call. And buy downs, buy downs, buy downs. So my best advice, look, we're seeing a nice downward trend, but it's not going to last forever. We are going to be in a bumpy environment. We have continuing resolution coming on March 14th. You have another Fed meeting on March 19th, although the Fed is really useless at this point. They've used all their ammunition. There's nothing really for them to do, but their verbiage will probably play heavy into it. But continuing resolution is coming. We're seeing tariff talks. We saw kind of the fallout today with Zelensky and Trump in the Oval Office. I mean, there's a lot of dynamics out there that people will need to digest. So from a consumer standpoint, we see them pulling back. And what we're seeing is traders just moving that money once again into treasuries, a safe haven for a guaranteed rate of return. All right, I hope everyone has a great weekend. The next couple weeks, hey, buckle up, right? We're coming into the heavy inflation data. We got non-farm payrolls coming this week. We'll get back into the thick of it with the start of the month. So here comes March. It'll be the end of Q3 by the end of March. The end of Q1 by the end of March. It'll be the third month of the year. So a lot to be looking at. All right, y'all, have a great weekend. You need anything, like I said, please don't hesitate to give me a call. I'm going to enjoy my final weekend here in Columbia. It's been one hell of a ride, no pun intended. And hey, can't wait to sit down with a few of you when I get back home and tell you all about it. All right, everyone, have a great weekend. Cheers.